Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. It's the US CPI Thursday and possibly the day when markets receive solid feedback on their bets of a rate cut by March. Amidst all of the rate cut conversations, there has been increasing talks on Japan raising rates by April, as said by a former BOJ official. Good morning, Jagger. What are your thoughts on the upcoming CPI numbers as well as the BOJ rate outlook?
Good morning. So CPI is definitely the focus of the markets because in the new year, we haven't had any major market moving event or policy factor that we could latch on. However, yesterday, despite lack of news, we did see some decent moves in some sections of the market, mainly the dollar yen, which moved to 146, which has seen multiple tops in the recent days, and this was driven by the lower wage increases in Japan and giving some credence to the doves in the Japanese side, expecting a rate change only in April next year, and as against January that was expected earlier. And we never know, even though a former BOJ official has hinted that way, we never know whether BOJ actually does that, because so many times they have disappointed the market by holding the rate and the policy unchanged. In the meantime, Japanese market has had a very large move. Yesterday it was 2% up, moving into the high seen last in 1990, and today it has opened with a gap up of 1% and already crossed the 35,000 mark. Yesterday only it had crossed 34,000 mark. So it's a big move that's happening in Japanese stock market. Possibly, a couple of news helping, that's the policy rates being held steady for some time. Then US yields also not really moving up too much. And then also there is a news saying that Japan will be taking the lead in as far as the chip making is concerned. A big development that's happening in the Japanese industry. So Japanese stocks have been undervalued for quite some time, and the investors who had entered Japanese market in the middle of last year and taken a backseat for some time have re-entered with full vigor. And I mean, perhaps this is the one trend that we will be watching closely. On the US side, there was really no important news, and except for some statements from Fed's Williams, who continued to toe the same line as other members. If the inflation drops, then Fed will be ready to cut rates, but then there is no evidence that it is falling to 2% immediately. So the expectation that central bank would be cutting rates as soon as March have slowly been decreasing once again, but the yields have remained around 4% mark on the 10-year, which is closely followed. And there was a good response to a fresh 10-year 37 billion issue that was done by the US Treasury, and that actually kept the yields quite anchored. Now the Eurozone, the main driver of Eurozone yields, that is the Eurozone unemployment hitting a record low in November, and quite the opposite data narrative relating to price of first rate cut. So maybe the first rate cut, which was being priced in for March or April, is pushed back again because Eurozone has been showing some strong indications of bouncing. And also we have had very large issuances of European bonds. If initially it was France and Spain, now it is also Italy, and they have been receiving very good responses. For long, Eurozone interest rates had been in the negative territory till the inflation cycle started, and then their rates have moved from negative to 4%, and this has helped a good amount of diversification of funds from the reserve managers from US treasuries into European bonds, and this has actually supported the euro despite some mixed data. And then the yen weakness once again helping fresh carry trade by selling yen and buying the European assets. So that's really the story of yesterday. Big move in Japanese stock market, and then a decent move in the euro, not so much back, accompanied by other currencies as well. And one more surprise big move yesterday was in the rupee. Of course, the big move is only in relative terms because we have been used to less than 5 paisa move for a long time. And yesterday we had a large move of nearly 20 paisa USD INR hit high of 83.18 in early trades, and then reportedly a large selling hit the market, and this once again rumored to be large funding flow from corporate which has been hit. And the key thing is this was not easily absorbed by the PSU banks at higher levels. Therefore, it paved the way for test of 83 level, which was broken temporarily, and then later it bounced. Yes, it was also seen that people who had pursued 83.05 to be a support went long, and then some stop losses also came into play, but now it is holding steady above 83. So the important point to note is that rupee is seeing a slightly wider range and a tendency to strengthen. Yesterday rupee was an outperformer among the Asian currencies as well. Chinese yuan, continues to trade on the weaker side, and even the Central Bank of China has been fixing the central rate of central fixing on the lower side. So not a very coordinated move in various currencies. Some other Asian currencies are weaker, particularly the Korean won. After their unemployment rate went up. So we have a day which is going to be in anticipation of the US data, both the CPI number as well as the jobless claims, which will be key for the market for getting next direction. I expect euro to remain firm because of genuine demand that is driving it up, and also USD INR to be really sold on any uptick towards 83.15 or 20. Just on the CPI monthly number as well as the yearly number on the headline, he is expected to inch up by 0.1%, that is 1 basis point, whereas whereas the core CPI year on year is expected to drop by 0.2%, that is 2 basis points. So this has been discounted, and any major deviation from these numbers will be a market mover, definitely. So it's all up to the CPI number, and of course it will be followed by PPI number as well tomorrow. So let's wait and watch for larger moves in the market. Thank you.
Thank you, JK. And yes, US CPI would be in limelight. There has been an absence of any major trends since New Year. So this can possibly cause some volatility, and that will be very interesting to watch. Now, Japanese stock market has been a rocket in recent sessions, given their years of undervaluation. On the other hand, we are seeing Eurozone economic data being better with low unemployment rate, improving macro data. So rate cut expectations for the Eurozone are also changing. So a lot of moving parts in the markets right now. When it comes to rupee, we had a large move yesterday of 20 paise. We saw a break of 83 levels intraday, but it's now holding steady above 83. So slightly wider range for rupee can be expected. That's it from us today. Thanks for listening. Tune in tomorrow to get the latest on the US CPI and other financial updates. Thanks for listening.